And good evening, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 future, the ES, for Tuesday, April 20th, 2021. The market did reveal more information to us today, which allowed me to now put a completion point for intermediate wave 3. If you remember, I had left that open with the possibility that maybe we were just going to also go into subdividing this minute fifth wave to complete minor wave 5. But the market has now drifted too far south to keep that count alive. So in other words, the market came down well below or not well below, but it broke below the low of the fourth wave. So this could not have been wave 1 of 5. So it ended up, I put the 5 there and the minor wave 5 and the completion of intermediate wave 3. Now what that does tell us is that we are now in an intermediate wave 4 decline. And we have put our Fibonacci's on here because what we're correcting now in this intermediate wave 4 is the intermediate third wave. You can see that's quite a bit of distance that we're going to be correcting. And the first thing that we go on in this one, since it's intermediate level, that it's quite common that it's going to end up within the price territory of the previous wave of 1 less degree. That's minor, and here's minor wave 4. So ultimately, we're looking for pretty much most of this last minor 5 to be cleared and to reach down, pretty much be all taken back, but reach down into this territory. So where our Fibonacci's come in, first one that comes in is 3,885. That's going to be 0.236 of wave 3. More common is going to be that 382. And that right now sits at 3,701. So you can almost call it 3,700, right in that area. And that fits cleanly with the other common relationship between this wave 4 and the previous wave 4, and that they end up in the same territory. And that would be pretty common. That's what we'd look for. And so what I'm going to see, or what we are now going to be detailing more, is that the development of this wave. So we can see this so far, it's been pretty choppy, but that tells me, I mean, this much looks exactly like the NASDAQ, actually. So I was thinking that that could have been it. And then we were off to the races. But remember what I said, that without much hesitation, the market needed to go back above those highs. If indeed this was just going to be my minute wave 1 of 5, minute wave 2, et cetera, sub waves, and that got destroyed because this did go up and it didn't do a bad job, but then it failed, and of course then it got caught and we just started to sink lower, and we are sinking in a 5-wave decline. So we might have A, B, C. And I'm looking for initially an additional new low below what we have today, 4110. So anything below that would be very fitting. So there's a couple of things. I'm going to say that that is more than likely just the first A wave. Now, that also suggests that this entire corrective process is going to be quite shallow. So right now it's $50, $60 off of the high, $70. That's really not much for the degree that it needs to correct. So we're going to have to continue to let this unfold. But initially for tomorrow, what I would be looking for is an additional new low below this, followed by an additional rally. And let me take that back, because we can also run some Fibonacci's just to give us a little bit cleaner idea that it's actually not going to work the same way. But let me just put that in. Let me see if I can pull up some fibs. It might come in extensions, but at least I can put something there. Right. So yeah, it'll work. So we can get an idea of where this market should drop to. So right now we're sitting just below where this wave would be equal to 100%. So we could come down to 4,096. Back to 4,100 would do it. So somewhere within that zone. I'm really not looking for this market to really start to drop. If it does, it would fit, but then we have to go back to that larger count, which would tell us we're likely going to be dropping a lot more. And again, it is possible, but we remain in earnings season. And obviously today there were some disappointments. There was news on Boeing. There was a lot of different things going on today that kind of prevented the market from doing anything but going down. And that's pretty much what it did all day. We had our rallies, but the trend was down. And that should persist tomorrow until we get those new lows in. Then we'll be looking for an additional rally to happen because we're completing a larger segment down and we would expect a rally. Then we're going to be using the same Fibonacci's, but we're going to go in the other direction. Wherever this low comes in, we're going to go from that high to that low and then work the Fibonacci. So let's just say, indeed, that's where it is. It's pretty much where it is. Now we're looking for it in reverse, but these levels would be reversed. So in fact, let me just do that so that we can see it more cleanly. 4,083 down, and I'm just taking it off of today's lows, and we may want to change that because we're expecting an additional new low, but you're going to get an idea. Here's 236, here's 382, here's 50%, here's 618. And that's actually what, I would anticipate that B wave to at least get there to 0.618, which is, 41, come on, give me that number back. 4154, 4155. But essentially we can go to 4161. We would really be looking forward to get closer to the highs, the area of the existing highs, and then for the next C wave decline to come. Under the current pattern on what I'm seeing. More to come, but that's what we've been looking for tomorrow, looking for a slightly low, looking for an additional rally up, followed by another C wave down. And we'll continue to update Fibonacci, continue to update expectations as the market tells us exactly what's going on. And that's going to be it for today. The next update will be Wednesday, the 21st.